Good morning. I'm just starting the YouTube stream. Just a few seconds to go. Okay, it's 8 o'clock on Friday, the 22nd of December, the last trading session before Christmas Day, and welcome everybody. Yeah, we are really in holiday mode. You can tell by the liquidity, and I will actually spend a second or two talking about the liquidity calculation that I actually do. But anyway, let us get on with the slideshow, and then we'll get to that. We have got some news, and it's in the slideshow. Oh, yep, sorry. The very first thing I must always do is do the disclaimers. So remiss of me, but let's just do them. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So with that being said, yeah, there is the current snapshot of Bookmap on NQ left and ES right, so we can see it's just a little upswing here on both of them. Anyway, let us do the slideshow because it's really ripping on NQ, as we can see. Let's do the slideshow because we have some news coming out in 20 odd minutes. So that news is the core PCE, core durable goods orders, personal income, personal spending. So there, that is significant. You can see the red marker showing the importance level for the USD. I'm not talking about the Canadian GDP. That's not something I'm covering. We will turn on the financial juice feed. Maybe we're going to get some liquidity or some volatility at that news release. If anybody was watching yesterday when there was a news release, there was certainly some ripping. It was over 100 points straight up in NQ after a little stop run below. So it is dangerous. So please be aware of that. Just because of the time of year, there are less traders around, and the ability of some of these algos or instos to push the markets as far as they wish is a lot stronger, i.e. they can do what they want, so we have to be quite careful if we are trading. I did take one trade earlier today, and I took some trades yesterday, but I think I've finished for Christmas, so I will not be trading during this hour at that news or in RTH today. But I hope everybody has had a good year of trading and things are working well. Okay, let's keep on with the slideshow. Okay, quick snapshot of ES, nothing really to talk about. Still on this upswing. We've drawn across a line or horizontal ray from the previous multi-month highs, and we've tested it, as you can see there, but until we break down below it, there is not much to say on this daily chart. On we go. NQ very much the same, so same again, very bullish. Even that down day a couple of days ago hasn't really done much to the overall picture, and yeah, as I speak we're ripping up, so let's keep going. This is a good snapshot for today. This is the 10-minute chart. Since I took this screenshot about half an hour ago, I think we're just about to tag the settlement T+1 in NQ. That's where we are, and we're already at that in ES. So we have not gone anywhere near yesterday's mid, so we are very, very bullish for the ETH session, and we're close to yesterday's high. So we're in this top quadrant is what I'd call it. Okay, and a quick snapshot of the relative volume. It's at 78%, and you can see the range that has been in play, not huge for ETH, 12 out of 22 for ES, and 65 out of 103, but probably some trades were available if you were looking, and we can look back at those with our hindsight lens on in a little while as well. So let's get rid of the slideshow and then move on to the TPOs. So let's have a look. Okay. So you can see where we are here, right at yesterday's settlement and very, very close to yesterday's high. So there's a good chance we're going to take that out before that news because we are ripping. So let's just watch what happens there. But if we scrunch everything up, you can see this breakdown day 2 days ago during the RT8 session, and you can see that breakdown point or supply zone, whatever you'd like to call it. These little dotted lines in Sierra are called singles. It basically represents where on the TPO there was only one TPO before the move down. So it is very equivalent to the LVN concept in auction theory, but it's interesting that there are two singles there and that we're almost right back at them. So that is commonplace in auction theory, Wyckoff, etc., that where you have a big breakdown, it often comes all the way back to retest. That's why some of the supply-demand setups that you've seen, me talk about, whether you've seen them on courses, on YouTube, wherever, you often see, if we do take the pen out, so where you have let's draw candles here. So if we have a candle here and then you have, let's just draw that like that, and then candles there, all this breakdown, it often comes right back to this breakdown here, and that is a supplies demand setup. I haven't drawn that very well, but I think people would get the gist. So the fact that in such thin liquidity that we've managed to get back there should not be too much of a surprise to people. Sorry, that was the ES, and across at NQ. Again, right at yesterday's T+1 settlement and very close to yesterday's overnight high, the Globex high. So you can see that yesterday's high is almost the same. Yesterday's RDH high is just a tiny bit lower, but we are getting very, very close. So once you get that close, you'd expect with a high degree of probability that we will touch at least the daily high, if not the Globex high, during the next hour or two. But we shall see. One thing about these market pulse icons is that they always stay on top, so I don't always have them there, and if you want to get rid of them you can go onto your taskbar and minimize those so that they don't interfere with what you're looking at, but we're going to have them there for this purpose. Okay, this is the filtered heat map for NQ, and it's only filtered to show orders that have not changed by size or by price. And what is interesting is if we scrunch this up and we go back a few hours, so you can see this came in, this is the liquidity that provided the magnetism. It came in, it's at the 16,950 level, and it came in at the German Open about 2 a.m. Eastern time, and that was the magnet that was pretty prevalent if you were looking at your heat map a little bit earlier. So if we have that there, I think I've got this dimmed out as much as I can, and we go back all the way to the London Open, you can see that that was the brightest liquidity up there, acting as that potential magnet. The only caveat was that it was at a round number, but that has drawn us up there and passed. In fact, they actually they did interact with it. I haven't got any volume dots, as you know, on this chart, but it did interact with that, and then we've come back down and then back up through it. Okay, ES, an unfiltered heat map. We can have a quick look across at the filtered heat map. Whoops. In fact, why not? Why don't we just blow it all up to max size? Let's just have a look at what they are drawing our attention to up above. So what have they got? They've got 4818 up above, and do they really have 500 orders? Let's just zoom right in. Yep, that 541 is smack bang on the button. That is a huge number in such thinly liquid markets. And that brings me on to that segue. So let's talk about, I mean, this is, let's talk about a subject that is very relevant at this time of the year or at any time of the year when we're going into a major holiday mode, or, whether it's a public holiday or it's a festival like Christmas. So let's talk about it. Okay, I'm going to drag something across, so bear with me because I haven't got it in as a tab. Let's just make it a little bit bigger. Okay, so this is the chart I'm using. I don't look at this chart. This chart is used to derive a calculation or to make a calculation for me on liquidity. So what is that liquidity calculation? It's shown down here in this bottom region, this liquidity calculation. So it's looking at the 10 nearest bars, in the order book, sorry, the 10 prices on offer in the order book above and at the bid below. So the 10 at the ask above, 10 at the bid below. So it's looking at 20 price levels, 10 plus 10, and dividing it by 20 to give an average number. I occasionally look at this graph, and it can be quite interesting to see. I mean, you can see this correlation of swing points with dips in this liquidity, and that's why some of that book pressure may be of interest to you. There are lots of different ways of looking at book pressure, and I won't get that into too much detail here. But the purpose of this chart is not really to look at book pressure for turns in the market. It's just to determine how thick the book is within 10 price levels, and you can see where I get that from. So when I look across at my numbers that I have, I can see in ES that liquidity, that average is 92, and in NQ that's 8. That's really not too bad. I mean, I'd actually be expecting it to be quite a bit lower than that. Again, the markets change constantly, they evolve. So that liquidity calculation of 90-ish in ES is absolutely nothing compared to how the ES was even just 3 or 4 years ago. That would not have been 90, that would have been about 200, 300 at this time of the day. So that is how much markets can change, and there are lots of reasons for that. We can only speculate on those because we'll never be able to prove exactly why the market has changed that way. But that does not mean that volume has changed. So the volume in the ES is as high today as it was 3 or 4 years ago, with much lower liquidity. So when you see that, that means that without those limit orders, that they will be tending, or they are very, very likely to be tending to break up their larger orders. Talking about the bigger players, because they're not appearing in the book as limit orders. When I see that order of 541, it is unusual at this time of the day, and it stands out like a sore thumb. Okay, let's have a look. Let's have a look at some live order flow action as we go into this. I've brightened up the heat map a little bit so we can zoom in on this one. This is to distinguish between the two tabs I've got. So this is the zoomed in one, which has got about 2 or 3, 4 minutes worth of action, and this is the filtered one, which is zoomed out to show significant levels in the book over a much longer period. So the idea is the same as a short time frame and a higher time frame chart. So that's how I'm using those two in Bookmap. And again in ES, whoops, done it again. A lot of people like having the liquidity, not dimmed out. So if we go all the way in, that for me is way too bright. With this slider, I was one of the people that encouraged them to do this slider on this heat map. This is years and years ago, back in 2015, before these two sliders actually existed. I just find it useful because what are we trying to do by way of our discretionary trading chart? Whenever we have a chart and it's not purely mechanical or algorithmic, what should we be trying to do? My personal view or opinion is we should be trying to make it as simple and as clear as possible, for the simple reason that we want to achieve consistency with what we do. The only caveat is that you do not want your mistakes to be consistent. You want your losses to be consistent, but you're not your mistakes. If you keep making the same mistake again and again and again, that means you are not learning from your mistakes. But other than that, that sentence does apply. Okay, and then when we look at this, it's always worth interesting as well before we get to these news releases, and we've got about 15 minutes exactly to see where they might be adding liquidity right before that release. And you can see that right about now, or what time was this? At 8 a.m.-ish, they added the liquidity in this zone here. This is the 4808 to 4810 levels. You can see that, if we zoom back down, you can see that there, and they added some up there as well. So it will be interesting to see if that stays in place right at 829, 830. Are they flagging where they want price to get to? That's the reason why we've zoomed out and we're having a look. It doesn't mean that price will get there, it's just an advertisement. And at the moment, that's where they're advertising, up above, not below. There is a level way, way below, and it's unlikely it will get there on that news unless it's so far out of expectations. And that level is 365 at, about 1750, 471, 750. That's quite a long way down from where we are at the moment. That's 80 points. Unlikely today on one piece of economic news. Maybe during the course of RTH would get down there if it was a down day, but at the moment I'm just saying I would disregard it for the purposes of this news release. Okay, so I'm just having a look at what we're doing here. So we're right on yesterday's high here, so I've got it marked at 98.25, which is just there. So when they've been grinding, I think grinding is an okay term to describe this. This is not spiky sweeps. This is just a gradual push up towards yesterday's high. You'd think that they are looking to see what is above it, and to start with by triggering some stops. Got a little bit of a way to go in NQ. They put that liquidity there, and it will be interesting to see whether we get there before that 830 release. But we are right on it in ES. So if we look at that, I'm just looking to see what we've traded. I'm just doing a shortcut on my mini profiles to see what has been traded so far. At the top, we are just forming a new high. We've only got 3 contracts traded at this very, very top, but the fact that we are not rejecting from it straight away suggests that we are going to trade some more up there. And the fact that we're hovering around this level rather than immediately pushing back down. But at the moment, there's only 3 traded there. There's no harm just adding that column back in as well. So we'll just have that one as the numbers. Okay, so it's showing a total of 34 over more than one visit. So it's 3 on this visit. Or at least I'm getting 3. Yeah, so it may be a bit slower today in our talk, and I will diverge and go and talk about other things as well, but I'm not expecting the action to be thrilling. So, it's not going to be a scalp party. Maybe at 8:30 we'll get a scalp party, but the action should be slower during the rest of this webinar, other than whatever may happen at that 8:30. Meanwhile, I always forget, we've got some people watching, so very welcome. I'm very much in Christmas mode today. We haven't got a lot of people in Discord. We've got a few people in YouTube. Feel free to ask any questions. If you've got anything on your mind that you want me to talk about my trading or trading in general, just feel free to ask those questions. As I said, I'm not trading today, and I'm very happy to focus on any questions or any particular topics that people have. I have got a couple of topics in mind that I will digress on. But meanwhile, let's just see what's happening here. So we've got 40. So we'll ignore what I said, and when I said there were 3. So now we've taken out that 40, and we have. Let's just double check this one. Yesterday's Globex high. Yep, 98.25. So we've taken that out by a tick so far, and we've got some resting liquidity that they're trying to get to. And we're watching to see whether we interact with this, but nothing so far is spiky rejection type action. We're just slowly grinding up here. So would I be fading this? Not just yet. In fact, where are we now in terms of time? We're within 10 minutes of a news item. Hey Tapesh, I got your question. We're within 10 minutes of a news item, so a major news release. So I would not necessarily be taking any trades here. Just because there may be a very, very good setup that you get. You might have had some reason to take a short here, but the problem is that any trade can take a while to play out, and if it takes more than 9.5 minutes right now, you could be trapped when there's a sudden surge upwards like there was yesterday at the news release, and I can't actually remember what that release was yesterday, but it was, the reaction was quite special. Yeah, Tapesh has asked a question. What is my trade management like when trading NQ? Okay, Tapesh, I would have to answer that depending on the sub session, because how I manage a trade in that first hour of RTH is completely different from how I would manage it in this breakfast session or during Asia. In fact, if I would manage it, if I took a trade after the China Open, which is China time, 9:15 in the morning to 9:30 in the morning, and trying to think, that's currently 8:15 p.m. to 8:30 p.m. New York time. I would manage that in a completely different fashion to RTH. So in RTH, I would have really quite wide stops for that first hour, and I would not be expecting my timing to be that good in terms of I would be expecting to be underwater for quite a bit, quite a few points, because RTH or that first hour is ridiculously choppy. And if you're 10, 15 points down when you take your trade, even if it happens to be a very, very good trade, that can often be fine. So I'm alluding to the fact that I talked about the rotations as well, and how those rotations govern how I'm placing my stops at the moment. And if you look at those rotations, I've been talking about in terms of a zigzag measurement of a rotation, I'm talking about a minimum of 2 bars and a minimum tick distance, which is going to be different in ES from NQ. That's how I'm measuring that zigzag rotation. I think the default zigzag studies in nearly every platform are absolutely fine for that. And I know there's some very expensive ones out there as well, but I don't think you need them in terms of determining what your rotations are. Okay, in terms of managing that, Tapesh, because I'm going to talk about losing in a little while after this news, I'm going to get back to you on that question, because I think it relates to that point. It relates to the whole subject of why we need to get better at losing, and why that should be one of the aims, certainly for me, for next calendar year. I mean, we're coming up to the time of the year where we're going to make trading resolutions for the entire calendar year next year. Whether we keep them or not is another question, but that is one of the resolutions that I will make, that I will get better. I will record statistics on trying to get better on observing my stop 100% of the time. So just in terms of live order flow analysis, one of the reasons, and I'm just noticing this again, one of the reasons why I have these two charts side by side, and you can only say this when you've got them live side by side, not with any hindsight screenshots. One of the reasons why is because you might have a level and you might have liquidity on one that is influencing the other one. In other words, we might already have tagged yesterday's high in ES, and we have, but we have not tagged it in NQ. We do not know which of the two markets is the real driver at the moment. You don't know, because you're not a giant player with billions of dollars. So even though we've just tagged this and we're right at liquidity, they may be trying to drive us right up to this liquidity at 16,969 in NQ, or maybe they're looking for stops above the Globex high, which is from what I was saying is right. Yeah, is right next to the RTH high. So they may be thinking that there's a bunch of stops because you've got the high of two sessions right next to each other. So that is why that is one of the main reasons why I think you've got to have them, or one of the reasons why I have to have them right next to each other, so I can see that. Oh, we're on a drive to settlement, during the London Open, but we might already, I might be watching NQ looking for a trade in NQ, but ES has just tagged settlement and it's bouncing straight off settlement, and I'm trying to hold out for along at that settlement, and the boat may already have gone because I was not watching what ES did. And that's why. So we've just gone through this little bit of liquidity in NQ, then now supporting it and trying to push us up into this other liquidity there. And I think we have just tagged yesterday's RTH high, which is 966 in NQ, and most likely we are going to go above it. We've got 4 and a bit minutes, and I will turn on that news feed in a little while as well. By the way, Tapesh, when I start talking about losing a little bit later, I'm not going to just try and just do it generically. I'm going to refer to some generic stuff, but I'm going to try and relate it to some of the stuff that I do and to what is available in Bookmap in terms of the types of setups and targets that we are accustomed to looking at in this particular stream. So yeah, I'm just watching this live order flow analysis because it's setting up right before the news release. So it's quite interesting that we're now at the high of the day, or just about the high of the session, the overnight session in both ES and NQ, into a major news release. Okay, that does not mean we'll go down. Quite often we can be at this high, and then the news will be favorable in their eyes, and we just bolt another 100 points higher in NQ. So, but it is interesting. If they were to go down, it's a very good position for them to have gone down. But I'm also looking at the auction in the last little while in NQ, and I'm seeing, we can see it here. You're not seeing a huge green delta tail at the top here in NQ. You are seeing it to some extent in ES, but this is quite mixed, so that's not suggesting to me at the moment that we have a great delta fuel basis for taking a short. And the fact that we are still pushing up steadily, not spikily, towards this double liquidity suggests that they haven't quite finished doing what they're doing. But again, I cannot predict the future. I can only observe what they're doing, and I can zoom in and have a look. But when they have a spike down or a spike up, you can see that one there, or a sweep up or sweep down, whatever name you wish to give this whole process, it's pretty obvious in Bookmap because it's on a millisecond basis. I wish I hadn't made my yesterday Globex high band so wide. I've made it wide to cover both the RTH and the Globex one, but you can see it covers about 7 points, so it looks kind of silly in the cloud notes in Bookmap, but bear in mind this thing can easily fly 100 points on a news release, so in that sense it's not silly. Okay, 8:28. Let's turn on that news feed. So I will shut up for a second, or I will get it going and make sure that we are connected. Yep, we are connected. We are streaming, or our friends from Financial Juice are streaming, so we will listen in to them. I am listening, but I can't actually hear anything yet. I'm watching my icon on Financial Juice. It is flashing that it is streaming, so maybe we'll hear them, but I can't hear anything. I'll just check my volume. Yep. That is better. Okay, so they're going to lead with the US PCE price right at in 50 seconds time. So I can see in NQ, I can see a little bit of fuel, just this little delta mini profile here, mini distribution here. That could act for fuel for a little bump up to the liquidity above, but let's see what the reaction is. Sometimes they are in the know before it's actually released, and I will get the pen tool out so we can mark it, because there is likely to be some volatility at this release. Okay, so a little bit of spiking down in NQ, even though we haven't released yet. 8 seconds. Okay, I'll turn them off. Right, so what did we see? We saw a little sweep stop right on the release. It was a bit like yesterday's, but instead of yesterday's having that little sweep stop and then going up 100 points, all we did was go up, grab the liquidity, and then come down. So it's looking bearish because all we did was grab that liquidity, and then we immediately went straight back to that scene of the crime, which is this blue cyan line. And you can see that same thing in ES. And now I'm looking across at my profiles, and I can see that we have got some fuel up above, and so this is exploring down. So we're looking to see in this, where is this liquidity? And they've got this liquidity here, only 25 at 937 in NQ. And let's just make sure we're on the right chart in ES so we can see all these MBO stops. Might make that a little bit less bright. I have to zoom it out a little bit. That 37 level got taken away and they went through it. So if we'd been watching this chart, we'd have seen that liquidity there got moved down and then it got taken away. So I don't think it ever interacted with that. And if we zoom all the way down, we've got the round number 16,900 where that's steady at 48 orders. But so far the action has been bearish. In terms of, was there a setup? Again, I remember I'm not trading, but you'd probably be looking at this little bouncing zone there. So if I draw it here, this little zone there, and to the extent that was a range, you'd be looking towards the upper quartile of that range to get short. And this is a very choppy market. So if it just goes down, then back into that range, once it gets back into that range is moved because the price is recentered. So it's irrelevant now. What I was about to say is irrelevant. But what I was trying to say was that, if you've got that little range there, which is just around about there, a test up to there, and then will it continue to go down is the question. Nice little spiky action there. Let's get rid of all of that. Come on. Good. Still not giving me my cursor. Aha, got my cursor back. So one thing to note with this is this sweep all the way up there, right? So that becomes a marker that we're likely to retag that, or there's a good probability that we'll retag a large portion of that sweep at some stage. The danger with all this thin liquidity, as I said before, is it can move further than you expect. So this could now be that retest of the scene of the crime that we were talking about that we did not have. You know, the aggressive trade I was talking about was a retest of this balance, but it went straight through it. So, you know, we would have been stopped out if we'd taken that trade. So it tried to test back up to it. So I'm saying that this little area, if I draw it, it's going to probably recenter it for me. But if I try and draw a level across back to the 945 level and say that at some stage, you know, in this little while, there would be a good probability that we'd get back down to that level, maybe a little bit lower. But yeah, we're talking about timing and price action, which is not the best today because we are in the holidays. So what I ordinarily say may well not work very well today. And it's one of those things, you know, you have to make a decision. Are you prepared to trade when a lot of your stuff that you ordinarily might use won't work well today? It is a question. You know, I've made that decision now that I'm done. You know, it's been a good week. I'm quite happy with the week that has happened. But yeah, so you know, you're looking to get in there, but it hasn't come down yet. So we're going to have a proper retest that's the end of the crime and then maybe get back down. They've got this liquidity at 47. But you're also looking at this, so you zoom right in and you see, are they just trapping sellers? So that's not the fuel that you want. You want trap buyers to get you down. Yep, that was the exact opposite kind of fuel. And then they rip it up. This is the absolute danger of trading in this type of market. So that could just be because, you know, for absolutely no reason other than that they could do that, you know, not for any other reason. They took away all the liquidity below, smashed it higher, and they're continuing to smash it higher now. So this is nasty, volatile, choppy action. And that's probably why a lot of the people attending this webinar are not trading today. I'm just looking to see, yeah, we're at a new high for the session and we are well above yesterday's high now. And we're closing in on that 17,000 level again. Let's have a look at what ES has done since that scene of the crime. 830 down. It's like a V bounce almost in ES. And you've got this great big liquidity here that they can see that we talked about earlier. You've got the 18 level, which is 557. And again, I still would not be surprised if we didn't come back down for nasty chops up and down. So we've hit a lot of liquidity. Maybe we're going to come back and retest that scene of the crime. Who knows? Yeah, so one good thing, you know, one good thing about this is it's a very good segue into the concept of losing. Okay. As I said earlier, one of my resolutions for the new year is to get better at losing. And what does that mean? That means respecting your losses each and every time. I'm going to point you towards three general, or not general, but you know, some of them are reasonably long videos on YouTube. You know, feel free to pause this if you're actually watching a replay of this. You can just search each of these webinars that I have watched, or just search for the title there, or you can type in the address that I've linked there. And it's all about this mastering the essential art of losing. You know, because we could talk till kingdom come, till the cows came home, about perfect techniques for using the heat map, for using the stops and icebergs or the market pulse. We could do that forever, and we could talk about timing an entry so that we were pretty darn good at it. We could get better and better about it. But what that precludes is that there is a lot of chance in this game. There is a lot of randomness in this game. I mean, we just experienced that with the way that they just ripped that price up after they'd ripped it down. Okay, today is probably a better example of the level of randomness than other days. Oh yeah, yep. So, sorry, Ron. Yeah, I'll get back to that. So I'm just focused just for a few minutes on this concept of losing. So I'll get off that screen and we'll get back on the heat map, and this is the filtered heat map, so you can see those levels up above are staying in place, especially that 995 level where we've just been. So that's acted as beautiful resistance. Okay. Yeah, now I'll answer your question before I get onto my interpretation of a couple of those videos, Ron. So, Ron, what I'm saying is that, I mean, let's have a look at this. Let's use this chart and use what happened at 8:30 as a very good example. Okay. Right. Ron, I've just stopped time there, and you can see I've stopped time at 8:32:30 seconds. Okay, and this is the scene of the crime, which is effectively the price level or zone that price was at before that major economic release came out at 8:30. All right, and what I want you to look at is this delta column here. And you can also look at the little distributions. You can see each of those distributions. There's probably one there, a much larger one there, and another one there. So there's a lower distribution, a middle distribution, and a higher distribution. By distribution, I'm just talking a large range or balance zone. Okay, so what I'm saying is that price often, or nearly always, goes down to go up. So they will go down first to get the fuel to get up. And fuel in these markets, if you're talking about a market in isolation that was not connected with every other market, which they are, but for this purpose, let's assume that Nasdaq futures is its own market and is not interconnected with all the other types of markets that are around there, whether it's the DAX, the ES, the YM, etc. When it comes down here, as you can see on this delta column, the red means that there is more sell volume than buy volume. And in this bottom distribution, which you can see, let me just get the pen out, the bottom distribution really is this part there. If we ignore this little top bit of the buys which managed to get us to the bottom, all of this are potentially trap sellers. So that red, massive red delta tail acts as fuel to get us going on our way up. And here we had, if you look at all of this from 8:30 onwards, most of this is red, right? So, if we ignore this, we're ignoring a good piece of market generated information that they have got a lot of potential trap sellers who will act as fuel to go upwards. Why will they act as fuel? Because all of a sudden they're on the wrong side, so they've sold. So to get back on the right side, to get back to cut their losses or to reverse or whatever, they then have to buy. All right. So and how many of them have to buy? A lot of them have to buy, and that gives us a lot of fuel to suddenly go stonking higher. And then when the market is really thin, and we looked at the liquidity calculation to work out how do we determine whether a market is thin versus thick. And remember, you have to compare this to similar times of the day on similar days of the week, etc., etc. But when it's really thin, it's easier for them to move the price a considerable distance higher or lower. And so they went down on this occasion, and again, I'm talking in hindsight, I'm not talking live, and they got a tremendous amount of fuel, and then they used that fuel to stonk higher, which they did. So if we ditch all of that, go back to that, and then we go there, you can see we're now at a new high of the session, and we're closing in again on that 17,000 level. So yeah, so that's effectively how they use that delta. And yeah, I know it was a little bit hindsight, a few minutes in hindsight, and I didn't talk about that live, but ordinarily I would have talked it live had I been stalking or actually correctly analyzing what the live price action was. But I must admit I'm in pretty much holiday mode, and I'm really thinking about my trading next week and next year. And a very, very important thing is if you are trading, you have to remain in the present. So if I'm trading right now and my mind is not right here, right now in the present tense, and I'm looking at what's happening, whether it's the delta column, the profiles, whatever else I'm looking at, I'm not focused on the present tense, I should not be trading. It's as simple as that. You should have rules set in place that you haven't got the requisite functions in place to trade. So just don't trade because it's a lot cheaper and a lot more profitable for you if you don't take those huge losses. Okay, so hopefully, Ron, that answered that question of how I use that one. Okay. Right. Yeah. Just going back to this essential art of losing, and I've zoomed in, or sorry, I've zoomed out of NQ and I've zoomed out of ES, so we can just watch them on a higher level basis, with the fact that the advertised liquidity is all above really in both ES and NQ. So on that basis, we'll just watch them. We can zoom in a little bit more in NQ horizontally, that is, and just zoom in a little bit. And maybe they've got to come down now and pause and breathe and get some more fuel if they wish to keep going up, or maybe they've had enough. Who knows? Again, we cannot predict the future. Okay, I may need to draw. All right. Okay. And so I'm not drawing something specific to what is happening in the markets right this second, okay? I'm going to type in some words as well. Okay. Let's assume that we've got a magnet and we've got price. Price is currently here, right? And we might have a prior swing high there, right? And price has gone down here, and we don't know what's about to happen next, right? But there are two reasons why price may go up. It may go up to continue exploring. Three reasons. It may go up to continue exploring upwards. For example, there's key levels, or the market's undervalued. The key levels above, there's further liquidity above. Secondly, they may be looking for all the stops above this swing high, and thirdly, they may see this liquidity level here or liquidity zone as a magnet. There could be lots and lots and lots of reasons, right? And we are here, right? And we have no other history, right? If we take a long here and we choose to go up, right? One thing that we could do, and this is on the basis, of watching all this stuff about becoming a better loser, is that we tell ourselves, and we accept, more importantly, that whether it goes up or whether it goes down is a 50-50 proposition, right? But if it does go up, we've got a clear target, which is there for our first main target. So that would become our first main target, or round about here, right? And we might have some basis for entering our trade right here, right? It may be a prior demand zone, it may be an LVN on the profile, it may be lots and lots and lots of things. But the important thing that those videos stress is that it is 50-50, because you cannot control whether the price goes up or down. You can, on a longer series of trades, have determined yourself a probability that it might be slightly different to 50-50, but in reality, unfortunately, the hard truth is that on this individual trade, it is 50-50. It is a coin toss, whether it's going to go up or down when you enter that, right? And what the Nick Shawn video did, for example, was that if you have established for yourself, say there is a clear invalidation point here, right? If you accept that this is 50-50, right, and that you've got your invalidation zone here, why, after it's hit this, why wouldn't you wait until it gets back to this invalidation point? Because you then know, even if you're talking pure risk and rewards, that your risk is essentially that, and your reward is that, right? And you've lost the need or the absolutely, compelling urge or desire that you must be right and get this exactly right, because you've accepted that this is 50-50, and you've also accepted that you've determined that this, that might be let's say that's 2 points and that's 4 points, just as an example. In other words, we're imagining a 2R trade here in terms of risk reward multiples. He doesn't like using that term, but I'm just going to use it because it simplifies things here. All right. So, why aren't you going to show the patience when you know it's 50-50? What's this going to do to you? It's going to stop you chasing, so you get in up here because you know that your invalidation is all the way down here. So this helps massively because it helps you with your concept that might be killing you, which is precision or over precision, or just impatience generally. And also, it's good. If you do go into the rate, so say this was the RTH session and that 2 was like 20 and that with 4 was 40 points, right? So that if you suddenly are 10, 15 points down, it helps you with your psychology of being down in that trade as well, because you're accepting before you got into it that it really is just a 50-50, and that it's quite likely that it's going to go down as much as it is going to go up. Right? And then why do you accept that it's 50-50? You accept it because of this. This equation here, 2 versus 4, 2R, right? And you accept that on the basis that if all of these trades are coin tosses, and you've taken it on this basis of you're mentally going to be happy just to let this run up to there, and you've got a good reason for that being your target, then if 50% of the time it does go there, and 50% of the time it does go there, and it takes you stopped out at your invalidation point, you're going to be absolutely fine, because you're going to be profitable in the long run. And depending on the size of your bets, you're going to make, potentially a lot of money. So that is why, that is so important, and that's why I've linked 3 of those videos today. It is such an underrated skill. So many of these webinars, including all of them, lots and lots of mine, have been focusing on very tight order flow analysis, where I'm talking about what should likely happen in the next few seconds to few minutes. I'm pretty good at that. You can go back through some of those webinars. I'm pretty good at calling it live, and I'm not doing it in hindsight. But that still gets us away from this, which is far more important than than being so precise. Anyway, that was just my rant for this session. So I hope that wasn't a bit overboard on people. I've just got to do a time check, 8:52. So yeah, we're now going to go back to live order flow analysis. Let's ditch all of this. Go back to that. Let's go back to that. So we're coming up probably the third approach to the 17,000 mark. Oops. And we're assuming with a fair degree of probability that they're attracting us up through these magnets above. Certainly this, even if this turns out to be a brick wall resistance, price often gets very, very close, or if not interacts with that brick before it turns around. And the same again in NQ. And the reason why we have that filtered one is it's because it's so much easier to see, rather than those algo bands, which make it really, really hard. So we know that 17,000 level has been called out by them as a magnet and is trying to get price up here. We do not know what is going to happen when it gets there. So, on the basis of what I was just talking about, saying that, this 17,000 was a very, very likely target, then, you've got a swing point here. If you'd had that patience to wait till it came back to that swing point there, and then take that trade and assume it was 50-50, then let it smash into that 17,000, you'd have been absolutely fine. You'd have got 2R or 3R or even 4R. depending on what size your stop was. And that is the point. They gave us a good example of why it is so important. Firstly, to accept your 50-50, and then just let your trades run and hit the targets that you set. That target that we had of 17,000 is kind of useless to us if we are not prepared to let our trade, say we got in around about this zone here, 16,983, 16,984, 16,985, whatever we would have got in through whatever means we chose to get in. That target is kind of useless if we don't try to get very, very close. So depending on the size of your stop and where your 1R was, but you had a very good basis, the fact that this is now the third touch, and the third touch we interacted and went through liquidity to hold a large portion of your trade right into it, or right within a couple of ticks. You're not scaling out most of it until you got there. And the fact that you'd accepted that 50-50 took your mental pressure away of having to be right, because you don't have to be right if you've only got to be right half of the time. All this psychological stuff about the need to be right is wrong for trading, because it's going to affect your balance. What is it going to do? It's going to mean the need to be right means you don't want to let a winning trade go back to break even or hit your stop. For example, you're on one of those apex things that I was talking about the other day, because they have that live trailing drawdown. You can see when you look at this and why you'd hold to your target if you have a 50% likelihood of winning. Why, if you suddenly are managing it too tightly, it destroys that whole psychology, and why that that apex live trading drawdown isn't necessarily very good for your long-term trading psychology. Right, I'm just having a look. Excuse me, let me just see if I can work out what is at the top here. Yeah, so at the top in NQ we've got a volume of 254. So up here. So if we add in, so we turn that one into a numbers or a bars and numbers, for example, 254. That is a poor high in NQ. Regardless of whether we have a big drop first, that becomes a lovely target much later on, because in auction theory that's a poor high. What does that mean? It means we have not finished exploring or auctioning around that zone, or it is likely to want to auction further up above it. Again, we cannot predict the future. We cannot predict the future of timing of when it might want to do that. All we can do is note that that is a likely outcome. Okay, I've only got 3 minutes. Again, sound is intermittent. Yeah, I'm sorry if I was not speaking directly into the microphone. Sorry, Tom. Yeah, maybe I should look in the Amazon Boxing Day sales about headsets. This headset's getting a few years old. Some days it's very, very good, and some days it's very, very bad, or I just don't have it close enough to my mouth. Okay. There's one other thing as well. Before we got to this, I'm talking about order flow analysis here. The previous time that we got up there, here, you can see that 222. So that was a poor high, right? So that became a target. So this is the same concept. That was a lovely poor high in NQ. So then we came down, but once we'd come down, that became a really, really good target. When I was talking about, you taking a trade here at the 83 to 85 level, I hadn't looked back across and seen that that was a poor high. So not only do we have that magnet of the resting liquidity, maybe the round number as well, that 17,000 has been a magnet for them all week, and the fact that it was going to be a third touch, like a double top to be taken out. So you also had that poor high as a target. So that is worth knowing. Tom, I'm going to try really hard on some of these future webinars to make sure that I always get this microphone lined up. One of the things that's hard about that is that I'm always looking around all these screens, and then my mouth may not be right next to my microphone because I'm looking in a different direction. But that's just one of those things. Yeah, thanks for that comment. Yeah, I'll just make sure. Yeah, I'll have a look as well. See if it's time to upgrade the headset or not. Okay. So yeah, so NQ gave us some good action. ES has now got this lovely sell resting iceberg above us. So you can see when they started it, and the fact that it's resting suggests that they're not finished and they've come back up. I don't think they've yet interacted with it again, but they're getting close, and it is likely with 165 that they will tag it again. I would not be surprised if they don't come back down and take this one out first, but you cannot predict the future. And yeah, bearing in mind you've got this liquidity that they've increased at the 4818 level and that great big band at the 4825 to 4827 level. So they've got all those levels that they're calling out for. Again, who knows what's going to happen in the next hour, whether they go down first or they go up first. We do not know, and we should not try to always know, as I hope I emphasized today. Okay, with that said, I wish everybody a Merry Christmas for Monday. I hope you had a good trading year so far, and thank you very much for coming. Thank you. I will sign off now. Thank you.